I don't want to answer your question about the recession.
NASDAQ 100 on a tear, up 0.8% as well. The 10-year yield comes in ever lower. Bond prices up, yields down.
All right, good morning, everyone. Another very green day in the market here. Let's go take a quick peek. Yeah, so you've got NASDAQ up almost 1%. Russell's up 2.3%, 2.4. Very positive day for small caps. So we're in the right space at the right time. You know, it's certainly lucky, but of course it was by design, as we discussed on the first day. The view is indeed that the Fed's becoming more dovish. You know, maybe not explicitly, but the market is certainly interpreting, you know, that they're going to have to get more dovish as we progress here. So we're getting, you know, a relief rally really in a lot of things, and we're certainly having that today. So let's just, I mean, these numbers are ridiculous, frankly. You know, we're at what, day 3, I think here. It's November 3rd, 8 a.m. Pacific time. These were actually up a lot more earlier. EOSE, Enovix, I think we're both up 11% each earlier, and so were a number of other things that were long here. So things have actually backed off a little bit, believe it or not. The one I do want to talk about mostly is Confluent, even though it, you know, looks the ugliest here. Whoops, I just zoomed over there. You know, so we're still down 16% on it, but what we did yesterday is we sold a couple things and rolled that money into Confluent here, lowering our average price, increasing our weighting. And today, Confluent, as you just saw there a minute ago, was up 7.5%, and it was up actually about 11% earlier as well. So, you know, good move, I think, you know, rolling some of that into Confluent. That was, you know, I think it was an overreaction. In fact, let me just run through some of the stats just really quickly. I mean, I don't want to belabor a single stock at this point, but, you know, it dropped, what, 45% or more, even if you look at the lows. You know, revenue was up 32% year over year. Yeah, that's not 90% like some of these things were growing previously. But 32% year over year in this environment is certainly not unhealthy. You know, guided next quarter to 205 million versus 212 expected. Yes, it's a miss for sure. Okay. You know, subscription revenue was up 36% year over year. Confluent Cloud revenue was up 61%. Dollar-based net retention ratio still 130%. 72% gross margins and negative 7% free cash flow margin at this point, which, you know, is not unreasonable. It's a, you know, growing heavily. They're spending, they're growing, and they're in a tough environment. So not unreasonable, great company, great prospects, right area, you know, thematically. And in trading it, I think, what is it, 5 or less than 5 times sales now? No, okay, 6. You know, so it was very, very rich previously, and now it's reasonable, to say the least. I mean, look at this as well. You've got a market cap of call it 5 billion, an enterprise value of 4.2 billion. So they're actually sitting on a bunch of net cash, total cash of 1.8 billion. I mean, they've got debt to, you know, so the net cash positions, call it, you know, 700 or 800 million. So certainly not strained in this environment by interest rates. You know, they could, if they wanted to, theoretically, they could pay off their debt and have net cash. So yeah, just, you know, I have no issues with Confluent here. I think they're being punished along with everything else, frankly, and a 45% decline was just way too much. So overall, you know, we're 3 days in and we're up 11.5% on the growth portfolio. That's ridiculous, but, you know, it is what it is. And it's the reason why we started the portfolio when we did, because I just was viewing the timing and the macro as being very favorable for this type of portfolio. and not just for a week or a month, but for the next year or 3 years, this could be, you know, a really nice place to sit. That being said, you know, let's talk bigger picture for a moment. My view is actually that we're likely to get some sort of relief rally here with an unknown period of bullishness. I mean, it may be 3 to 6 months, or it may be 6 to 24 months. I'm not sure. But my outlook after that is not particularly good. I think we're going to get a significant run up in equity markets. I think, you know, partly due to the pausing from the Fed that I expect, or at least the you know, pivot to being more dovish as frankly things start to break. And then I think we could have an ugly period after that. I really do. So yeah, so this, you know, this will, again, the whole thing is opportunistic. We'll pivot accordingly, but right now, you know, day 3 and the levered portfolio is up almost 15% on actual capital. The medium risk portfolio is actually now doing decently, despite, you know, as I said yesterday, some pretty horrible entries here because we bought the open indiscriminately. But yeah, you know, other things are making up for it. I mean, even Etsy, I was up 9% today. That was nice to see. Oops, I should be over here. I mean, just a sea of green, right? It's, yeah, 20%. What is that? Schrodinger. Oh yeah, of course. Schrodinger's on a tear right now. Recursion, yeah, the biotechs have just had a really big day as well. Yeah. So, and SolarEdge is up 25% because we initially bought after hours, if you recall, on that first purchase. So that's why that's up as much as it is. I'll unhighlight these eventually, but just for, you know, I'll leave them here initially for a bit, just as a reminder as to why these are highlighted, which is that we bought them initially in the after hours. Enphase call options, I can actually update. Let's do that right now, live, really quickly. So Enphase, let's say. And so what I do is I go to options over here, and then we'll go to the chain, go to January 2026, and I expect it's up a bit. So there's the 75s, and bid is now 34, ask is 36.20. So let's take those two numbers and we'll update that. I should really have this in the growth portfolio as well, but frankly, I don't actually have the room. I mean, we're 100% invested on the growth side. So there is no room for that, as much as I would actually like that. So maybe a bit of a flaw between the two models there, but anyway. Did that work? Yeah, that worked properly. Yeah. So we'll go with the midpoint between the bid and the ask, as I said yesterday, which is 35.38. So where is that? 35.38. And this is not updating. Why is that not updating? So that, oh, it's doesn't know what the math is. That's the problem. There we go. So now it's, yeah, up about $1,000 versus yesterday. Actually, strangely, right in line with the actual equity right now. But yeah, anyway, here's what it is. So, and now if we scroll down, oh, also, you know, the junk, as I call it, you know, up 20%, right? Because we're in that sort of environment. That's the reason I hold this, is not because I like Virgin Galactic by any means. But I do think it's probably worth $3 at some point, and we'll close it out and walk away. So we are now 78% equity because equity is outperforming fixed income. But fixed income's not doing bad either, right? We're up 1.86% on our treasuries, which is pretty darn decent for something that's not supposed to move very much. And overall, we're up 19,000 today on our 400, so up 5% overall after 2 days of trading here, or 2 days of investing, I should say. I mean, again, kind of absurd, but our timing here has been pretty good. This portfolio, though, as I said yesterday, didn't really benefit from the best timing, but it's still obviously not bad, that's for sure. Then the low risk, you know, just continues to do well. Here we have treasuries up 4.71%. Again, the yield on these things is like, what is it? Let's just go look. So I keep making up numbers here. I mean, it says 3.57. I'm not sure if I entirely trust that, but we'll go with that for now. So 20-year, it's a basket. It's not 20-year. It's 20 plus. Are yielding apparently 3.57%. So we have now made the entire yield, more than the entire yield in 3 days in the fixed income portfolio here. So that's all right. You know, fixed income up 3% in 3 days. So yeah, not much more to talk about. We talked about Confluent and that role and how that's looking. No plans to sell that for probably years at this point. I like the entry, and I'm glad we increased the weight. And over on this side, we had a pretty decent weight to start with. So we'll get to benefit from that. Although currently still underwater because we initially bought after hours at the relatively high price. So yeah, just a quick update. Things are certainly looking good. So we'll leave it there for now. Oh god, look, these things are just running like crazy too. Again, despite having bought after a 20% increase, which I didn't like either on Palantir. We bought after it went up 20% as well, much like Camping World, but it continues to run. Yeah, we're back in that environment, I suppose. And even Tesla's doing well, right? Less so here, but on the growth portfolio, it's up 10%. Again, I don't love the valuation here, which is why it's a relatively small position, but I would like to own more if it ever dropped significantly. But nevertheless, up 10% in the meantime. So. Okay, well, thanks for tuning in as always, and we'll see you next time.
So the decline of interest rates by 20 percentage points over that period was a dominant factor in the financial world. I think it was the most important single event in the financial world in the last 50 years.
NASDAQ 100 on a tear, up 0.8% as well. The 10-year yield comes in ever lower. Bond prices up, yields down on the 10-year yield.